I want to turn now to the last topic, which is, this sounds like great opportunities for funding all sorts of R&D. I want to now talk about when these methods fail, because they do. They're not appropriate for everything. So I want to give you an example. And the bad news has to do with Alzheimer's as just one case in point. So for Alzheimer's, $30 billion might not actually be enough if you wanted to focus on a pure Alzheimer's fund. And part of the reason for that is that Alzheimer's is a really, really difficult disease to treat and develop drugs for. So it takes about 13 years to develop a drug for Alzheimer's, not 10, because you actually have to catch Alzheimer's before it happens. It looks like after it's developed, it's very difficult to treat it. You want to catch it earlier. And that means you need a larger clinical trial. So you're not talking about $200 million in out-of-pocket costs. You're talking about between $500 to $600 million in out-of-pocket costs. And the probability of success, well, I'll show you in a minute what the current evidence is, but it's a lot less than 5%. Now you might say, how could it be a lot less? There's not that much room to begin with. You'll see. The point is that in Alzheimer's, there's just not enough science. We don't know the biology of Alzheimer's, whereas there's a lot of information and great research on the biology of cancer. And so we simply don't know enough to be able to diversify, even if we had the funds to diversify. And as a result, the private sector will not do this. They will not create an Alzheimer's focused fund. And to give you some sense of what the statistics are, in 2014, there was a review paper written about the fact that Alzheimer's drug development efforts were really challenging and faltering. And the case that was made was that over the course of a 10-year period or so, there were a large number of various different kinds of Alzheimer's related trials, and they all but one of them failed. So the success rate, since 2002 up to 2013, the paper was published in 2014, but up to 2013, over that 11-year period, out of 400 some trials, there was one success. And that success occurred in 2003, and the drug was Namenda, which doesn't even treat Alzheimer's. It treats memory loss, which is a symptom. So according to this estimate, the failure rate in Alzheimer's is 99.6%. And if you take a look at what's happened over the last few months, it's hard to disagree with that number, because you'll see some failures that I'll show you in a minute. The problem is that we can't afford these failures. We need to actually engage in a broader effort. We need parallel efforts going on at the same time. Now you might think that that's not prudent, because shouldn't we go one at a time a little bit more cautiously? And here we would argue that if you engage in one at a time, well, first of all, the waiting time for successfully developing an Alzheimer's drug on average is going to be about 1,300 years. Right? That's just the reciprocal of the probability of success. And assuming there's a 1% probability of success, you're talking about a long, long time. And there's a cost to waiting. The cost to waiting is that this year, 2017, we are forecasted to spend $175 billion in Medicare and Medicaid expenses alone, focused on treating Alzheimer's. It doesn't capture the cost of care or the lost GDP revenues. It's literally just the cost of treating the disease. We're already spending $175 billion. So in a paper that we published in 2014, we got some Alzheimer's experts to come up with all possible potential pathways that they would pass the laugh test with by talking to their colleagues about pursuing in a drug development program. And they came up with 64 different projects listed here. And I've categorized them into broad categories, like the amyloid hypothesis, the tau pathway, neuroinflammation, so on and so forth. This really strained the imagination of these experts. But even with 64 of these projects, if you diversified across all of them, first of all, you would need a lot more than $30 billion. But even beyond that, the fact that they're correlated means that you're not going to get the kind of risk reduction that you thought you were. Now, how do you calculate the correlations of this? Because none of these have been done. In fact, do you know how many of these pathways are being pursued right now, actively, out of all of these 64? Anybody have a guess? We are?
4.
You're being generous. I would have said 2.5. in earnest. Two, really. The amyloid and tau hypotheses are by far the most popular, and now starting to look at neuroinflammation and maybe a little bit of this or that. But really, it's like two, which is pretty depressing. And of the two, there are lots of little projects within those two that are going to be highly correlated. So the way we calculate the correlation coefficients across them is in a very, very heuristic manner. And let me tell you how we did it. So what we did was we listed the 64 projects by groups in this matrix, and we asked these experts about every single cell, every pair. And we asked them exactly the question that I just asked you. If one fails, does that make you more or less nervous about this other one? And we got 4 different categories of nervousness. Does it have any effect? No. If that's the case, we assigned it a green value of 10% correlation. If it made them a little nervous, then we gave it a yellow or 25% correlation. If it made them very nervous, we assigned it a 50% correlation. And if it really scared them and they were going to lose sleep over it, that would be a 90% correlation. And so this is how the experts filled out the matrix. Now, just doing that and substituting the numbers, that's not enough, because it turns out that correlation matrices have the weird property that if you just put random numbers in there, it might not actually be a bona fide correlation matrix. And the way you know that is if you try to aggregate up the portfolio and calculate the portfolio variance, you could get a negative number. And that would be bad. Variances can't be negative. Sometimes if you forget that fact, you can construct incredibly profitable arbitrage opportunities that have the amazing property that they fail dramatically when you implement them. So you do not want to mess around with this. You need to construct a correlation matrix that is actually a legitimate correlation matrix, and there's a way to do that. It turns out that a paper published in 2006 in the journal, the Siam Journal of Matrix Analysis and Its Applications, a journal that I read all the time, this paper shows you how to construct a bona fide correlation matrix that is as close as possible as to the one that you concocted with your experts. When you do that, and you run a simulation, a very simple simulation of what a fund would look like, what you get is, based upon various different assumptions about the probability of success and so on. So at this bottom line, it's the expert's assessment of the probability of successes, and using these correlations that I just constructed, when you do that, you get an expected rate of return of about minus 14% for this Alzheimer's Megafund, and a standard deviation of 33%. How many of you would like to invest in that? The industry won't do this. But if you actually factor in the cost savings of that $175 billion, if you calculate that by reducing the duration or delaying the onset of Alzheimer's, you can actually save some of that money. It turns out that when you actually look at the bottom line, over a 20 or 30-year period, this is a very good investment, an Alzheimer's Megafund. But you're not going to get any investor, any private sector investor, to do this. This, you need government support. So this is an example where this method, this kind of financing, is just not going to work. You're not going to be able to get any investor in their right mind to buy this kind of paper. You need to have a different mechanism. So I don't want to leave you with all the bad news. There is a lot of bad news in Alzheimer's. For example, I mentioned to you that over the last 6 months, we've had 3 failures of phase 3 Alzheimer's trials. Eli Lilly, Lundbeck, and now Merck. And they're calling into question 4 or 5 other phase 3 trials that are ongoing. In fact, there's a very big trial that's happening right now. In fact, you heard it from one of our speakers, Mayukh Sukhatme. Axovant has a very important trial going on for intepridine. That's going to read out in October. And so who knows what will happen there. If it succeeds, that's going to be an amazing breakthrough, because the last Alzheimer's drug that succeeded was 2003. So this would be really good for the industry. But the chances are stacked against them. So we'll have to wait and see. Let me give you some hope. At the same time that this business model is failing, scientists are making progress. In 2014, our local experts over at Mass General, Rudy Tanzi and his colleagues, have developed 3-dimensional models of the Alzheimer amyloid plaques, three-dimensional models, not just in flat Petri dishes, but the 3 dimensions seem to be important for how these tangles form in the brain. They're actually able to replicate that. When I read about this, I got incredibly excited. Not knowing anything about the science, I got excited about this because what this means is that if you can really do this on a large scale, you can start doing high throughput screening now for these anti-amyloid plaque inhibitors across these large pools of tangles. Second, it turns out that one of the challenges of getting drug into the brain is the blood-brain barrier. Well, also in 2014, some of the scientists at Genentech figured out how to recruit part of the body's own transport system to actually get drug across the blood-brain barrier. They haven't done it in humans, but they've done it in primates, so that's a very good sign for being able to do that in humans. That's a really huge roadblock for dealing with Alzheimer's drug delivery. And finally, this is probably the most exciting thing that's happened in the last several years. In January, some researchers have shown in rats that they can actually reverse some of these amyloid plaques. They can reverse it using a particular kind of a therapy. Still years away from the clinic for humans, but it tells us that there's progress being made. We just don't have enough shots on goal, not enough funding, and it's going to be that way until we can change the risk-reward trade-off. So there are lots of other applications that we and others are working on to take these methods and apply them. Many of these are business models that require public partnerships with the private sector. For example, pediatric oncology, I think I mentioned last time that for whatever reason, it's been a real challenge. The economics are terrible, and we have children that are dying despite the fact that we think we have the technology to be able to address these challenges. We don't have the economic model to do so. Vaccines are also one of these economic orphan drugs where we can't get enough funding. Anti-infectives, clean energy, climate change, asteroid mining, and space colonization. These are all really big issues. And what they have in common is that they're long shots. How do we fund long shots? You're going to hear from our first of the 2 speakers on exactly that topic, how to fund these long shots from a generic perspective. And the second speaker will actually tell you from the business perspective whether or not this is or is not feasible. So the last thing I'm going to leave you with before we take some questions and then take a break is, can we afford this? Because we're talking about large amounts of money, many, many billions of dollars, and the industry is already spending billions of dollars as it is. And I'll go back to a slide that I showed you the very first day of class, which is that the announcement that SoftBank has partnered with the government of Saudi Arabia to raise a $100 billion technology fund. This is a fund devoted to just investing in technology, and it's going to be invested over the next 5-year period. So we're not talking about stretching this out 20 or 30 years. $100 billion will be invested by SoftBank and Saudi Arabia in the next 5 years. There is plenty of money out there. The question is, can investors get a decent rate of return on that money? Because I can guarantee you that this is not a donation. This $100 billion is looking for a return. If we can offer the return, trust me, the money is there. But that's the key question. And the fact is, we don't yet know. We have a lot of interesting ideas and business models, but it hasn't been fully pressure tested yet.